And a backtesting session, and I'm in one live trade right now that I'm going to go over. And I wanted to mention that I do have a new addition to my strategy, which is that I've begun, instead of finding breakup structures on the same time frame and keeping all my trades in the exact same time frame, I will zoom in on a smaller time frame on every single trade and look for a new breakup structure there. I believe this will give me optimized entries, better risk to reward ratios, and make sure that the trades I'm getting into are legitimately going in the direction I want to. Starting with the first trade. Okay, for the first trade, here we have a sharp bullish block right here that price taps into at the very beginning, and then a bearish break of structure followed by a retracement into the order block. And then what I was able to do is find a fair value gap right here on the 15 minute. And I will go on to the 15 minute right now to show that, although that may have actually been taken on the 1 hour, I will shoot. So that trade was taken on the 1 hour instead of the 15 minute, as it had said previously. But in other words, on here, you can see much more clearly how price taps into this order block and then price retraces back into this order block and wicks past it, which is what I like to see. I don't usually like when when the body of it goes past the order block, because then that means to me that the order block is invalidated. As far as I know, that's my limited knowledge of the markets. That's how I think it'll go. And then that sort of touches into support and resistance area trading. What I would do in that scenario is I would probably mark out a new order block and then see if the market respects that order block, and then it would have to obey the previous one in order for me to still find a better entry off of that. So that kind of echoes support and resistance trading, even though that's not really what I do. I think that's how it works, but I still have a lot to learn. And then here I would have found a very stark bearish candle, which would have been a solid indicator that there is going to be a fair value gap retracement, although I don't trade off of fair value gaps. But since it's so stark, obvious right here, I believe that I really would have no reason and no need not to. I feel like, and then here, this is a perfect example of price coming in and retracing this area where it's been avoided because there's no contradicting orders. And then here, the stop loss would have been set above here, take profit below here. It would have hit, of course, but because this is sort of a unusual confluence trade, um, although there is a liquidity sweep, it's not felt a little unusual to me. I would only risk 0.25% of my account on this trade. And another thing I wanted to say is that instead of doing 1% a day and then 0.5% on de-risk days, I've decided to move it down to I'll only risk 0.5% of my account on a regular day, 0.25% on a de-risk day. And if I'm really feeling confident, I would risk 1%, just because I don't want to be gambling, even if this is a demo account. I've done that a lot and I've lost a lot of demo money, but I just want to make sure that I fully understand the basics of this before I go up to 1%. This trade is more or less very similar. We have a breakout structure to the upside following this liquidity sweep, and then we start to notice that price sort of plateau, Eric doesn't, sorry, price consolidates, retraces back down, makes this order block, price retraces back into here, and in doing so, it also creates a equilibrium phase. And then as soon as I can get an entry or a break of structure off of the 15 minute out of that order block, it out right here as well. low. This price is already in a downtrend. As soon as it breaks out of this order block, I would have placed my trade right there, stop loss above here, take profit below here, and I really see no reason not to make this is full or 0.5% risk trade. There was nothing about it that was a sniper entry that I really liked, but it seemed to be a pretty standard and pretty solid trade. And since this has a 3.26 risk to reward ratio, I'd probably put a take profit here around 1 to 1. And then if it hit that, move the stop loss to break even so that even if I got stopped out, I wouldn't lose any money. And then second take profit here, which would have, of course, been hit. Or third back tested trade of the day. Here we have an extremely break of structure to the upside. Time frame is just a mere retracement, but here it forms an order block, or it forms an order block again. Price goes down, retraces back into here, and this trade I was really feeling solid about because price hits equilibrium, price continues to retrace back into this very clear order block, this very clear price range that I liked a lot. I would simply just find a as soon as it breaks structure to the downside, which would have been right here, I believe, although I'm not entirely sure. Um, or maybe right here, I would have to move this just a tiny bit when price closes below this candle. Then a 1 to 1.5 with take profit below here, stop loss above here, standard trade because I feel solid about this trade and that it would go well given the confluences. I feel like I would risk up to 1% on this trade. Get in real life. See here is price tends to very similar, makes a bullish retracement. Price makes these order blocks. It makes this general area of within here, there's this general area of consolidation or what I believe to be accumulation, if I'm getting that right. Um, Up into this area, even when it breaks structure to the downside. But what I like about this is it forms very clear equilibrium, which makes it a lot easier when price goes down so low. It makes it easier to find a trade within that's within a premium range, which is premium as in discount for shorting or a good entry for shorting. And up here on the 15-minute, which is um, a I believe 5 to 1 risk to reward ratio trade. If I set the stop take profit all the way down here, obviously I'd set multiple. That's why I've set one here, one all the way down here. Um, I suppose I would set one here as well, and one at or near 1 to 1 risk to reward ratio. And just because I feel like the how unrealistic it would really be to hit a 5 to 1 risk to reward ratio trade. I would probably do just a regular 0.5% risk. I should not have written 1% risk. Um, be a 0.5% risk trade. For the fifth and final back tested trade, this one is extremely similar as well, where price makes a bullish retracement on a bearish trend. Starting here, the retracement reaches its peak right here, comes all the way down here, moves back up into this order block, and is, although I didn't draw it out, well within a premium for equilibrium. And as soon as price breaks structure to the downside on the 15-minute market, which I've marked out to be right here, when it closes below this low, I will jump into the trade and set stop loss above here, take profit below here, of course, would have been hit. So now for the live trade, I'm looking at something extremely similar. Sorry, is that what I'm really looking for here is I've marked out this area, traces up, stops up, goes back down into the dumps. Um, what I'm looking for, but what I'm not exactly sure will happen, is that if price will retrace back into this area of accumulation, and if it does, then as soon as I get a break of structure, I'm going into the trade, and I'll set my take profit all the way down here, and I could actually move it. That would give me an absurd 8-to-1 risk to reward ratio trade. And there's really only medium impact news. There is some news on Forex Factory, but it's not anything groundbreaking. No CPI, PPI, NFP, FOMC. So what I would really be looking for here is just a 0.5% trade due to how unrealistic this pop probably is. And what I'm really worried about is that this just won't happen, that I've more or less just missed my shot here, and that I'm just going to have to roll with whatever order block accumulate, whatever happens down here, and that in support and resistance terms, it's broken through this level, and I just have to work on this next one. So overall, I'm feeling very strong about how that ability to predict the USD Canada markets, especially with the US dollar getting progressively weaker now, but more so because of backtesting and trading and understanding the general pattern of the market. I believe that although I'm still better off, much better off going to a casino than actually trading with money, I believe that I'm getting a lot better, and I hope that these videos can be useful in um, accountability and for general information. So thank you for watching.